Hello everyone, welcome to Sharevidya's YouTube channel. Today's video is all about how to diversify your portfolio. It is very important to diversify your portfolio to sustain today's haphazards like COVID or crashing economy and so many other effects which can indirectly harm your portfolio. The main focus of this video is to address the four different segments of portfolio diversification. First, we'll understand what is diversification. Then comes the types of diversification. We also need to know what are the common mistakes that people make in mutual funds and also how you must avoid them. And the last and the important thing is 4 tips for optimum diversification. So, sit straight, open your ears and your mind, and for the next few minutes, give us your complete attention. Let's get started. First comes what is diversification. Well, to put it in a simple manner, let me tell you one story which every Indian household faces. Once I was talking to my mom and I happened to notice that she was using so many different kinds of oil in our daily cooking, and I didn't even notice them earlier. She used rice bran oil, groundnut oil, mustard oil, then fat free oil, etc. When I happened to ask my mom why does she use so many oils, she said that it is important that your body gets all kinds of nutrients which each and every kind of oil happens to give. When I applied this kind of theory in investing, well, I found a really gem of a theory that diversification is something that is going to help your portfolio to get all the nutrients that it wants. Allocation of stocks of different companies based on factors like capital size, sector, risk, return is called as diversification. It is important that we have a specifically structured portfolio which has diversification so that any harm to the market cannot affect you. Since our childhood, we have often heard this quote that do not put all your eggs in one basket. Have you ever wondered why? Well, the answer is also simple. If one egg rots, the whole basket is ruined. The same applies to investing. If you put all your money in just one stock, and if that stock is happened to hit by any kind of pandemic like COVID, or maybe even a sector degrowth, that can affect your investment very badly. So be wise enough to diversify this into many segments. Now that you know why diversification is so important in investments, let's get to understand what are the different types of diversification. The main diversification types are what we have chosen to make you understand this concept in a simple manner. First is the individual stocks, then it is sector-wise diversification, cap-size diversification, asset classes, and risk diversification. Let me explain you individually. The first comes individual stock. Now, for example, you have faith in some of the companies like, for example, Reliance Industries, Tata Consumer, Infosys. These companies are maybe reliable because they have been performing consistently over the years. But in situation like COVID in March 2020, when everything came crashing down, it was important to analyze which companies actually made money in this period. And you know better, Reliance did that. So you need to find such companies which will make you money even if anything bad strikes our economy and it will not affect your portfolio. Next comes sector-wise diversification. Now, our economy has many different kinds of sectors. For example, pharma, FMCG, IT, banking, NBFC, infrastructure, oil and gas, and so many more. But have you ever wondered, some of these sectors are already in negative growth. So, will you ever invest in these sectors? Now go back to your portfolio and check if you have these sectors and if you have invested in the stocks which are related to these sectors. You need to invest a sizable portion of your portfolio into sectors which will never go out of trend. For example, are basic necessities like electricity, food, medicines, etc. The third kind of diversification is cap size. Now, what is cap size? Cap size is the market capitalization of a company. Market capitalization is further categorized into small cap, mid cap, and large cap. Now, one mistake that many of us make is that we believe that all large caps are highly performing stocks. Well, the answer is no. There are only considerable large caps which are actually performing better than others. So, and also, even in mid caps, there are some remarkable companies which have a smaller capital size, but they are doing or maybe giving us far better returns than large cap. It is our duty that we know which all these stocks are and we have a thorough research and analyzing in these aspects. The fourth thing is the asset class. Now, asset class is an important type of diversification in mutual funds. For example, we have different kinds of assets like equities or debts or maybe commercial papers, debentures, bonds, etc. And every kind of an asset class has its own risk and reward ratio. According to our investment needs, we need to define our goal and achieve these by investing in different asset classes. Fifth and the most important is the risk diversification. Diversifying risk is the main goal of having a portfolio which can outperform the market. We know that index funds are in the lower risk category, whereas high end equity funds are in higher risk categories. So, depending on our goals of investments, whether we want guaranteed return or maybe we want high returns, it depends on what kind of risk factor applies to your investment. So, make sure you analyze your own needs of investment and then diversify your risk based on the asset classes. Now that we know the types of diversification, we also need to understand some really common mistakes that people make in mutual funds and why and how you will avoid these mistakes. The first one is when they understand diversification, they think that buying mutual funds from different companies means diversification. Well, this is not the idea that we are talking about. If you buy an equity mutual fund from different companies, it doesn't make sense because these funds from different companies may have the stocks of same companies. So eventually you are blocking your funds in the same kind of companies. What you can do is that take different kinds or categories of mutual funds. For example, index funds or debt funds or hybrid funds which consist of equity as well as debt funds. Then one recently that SEBI introduced is the multi-cap fund, which is what we were talking about, that different cap size of companies is involved in multi-cap funds. Now the second mistake is that buying in small quantities from all types of funds. Well, diversification is important, but over diversification can be detrimental as well. So, first of all, make sure that you know your priorities and then choose maybe 2 or 3 types of diversification into your portfolios so that you are not averaging your profits. The next and the most important segment of our video is 4 tips for optimum diversification of portfolio. The first thing, as I've been telling you throughout this video, is know your why. Why you want to invest? What are the goals of your investment? What are your priorities that when you want this investment to realize some returns? All these things you should need to be thorough with so that you take optimum decisions in diversifying and managing a portfolio which will bring out the best results. The second point is that you need to do your research right. track the current and past market trends. For example, these last 7 months have been a complete haywire from markets going from almost 52-week low to touching 52-week highs. Now, this kind of market trends are important so that we allocate the weights to our companies and whatever stocks we are allocating in our portfolios. Third is the allocate your weightage towards the different types of diversification. You do not need to accumulate all types of diversification in your portfolio because, as our fourth point says, over diversification is detrimental. So, do not over diversify, but know that, for example, two or three kinds of diversification, like for example, individual stock, sector wise, and maybe even cap size, will be beneficial to your portfolio, then you can go on with these kinds of diversification. Yes, so that's it from our side. If you want to know about anything, just contact with us on these email address, mobile number and website. And for more such videos, stay tuned and give a thumbs up to our video and please subscribe to Sharevidya Consulting. Thank you and have a nice day.